Hey, all you crypto guys out there. So, hey, look, we're just sitting tight. We've talked about it for the last couple of weeks, right? After that big sell down, we're going to go. We think we found a bottom. I'll show you the chart in just a second, but we think the bottom's in right now for crypto, if anything. And so, like we've talked about the last couple of weeks, all we've done is here and there, we've added a little bit to positions and stuff. We still own Bitcoin, Ethereum, in the Nexo account, which we've been using as the focus, right? That's the one we started with about 260 bucks. It's up to about 400 bucks now. But we wanted to have a portfolio that was accessible for anybody. You know what I mean? If you got 50 bucks to start trading crypto, you got a place that you can come and get some good advice. If you got 50,000, it's just add some zeros to it, right? It's always nice to add zeros, guys. But look, it's been a kind of interesting week, right, with crypto. Let's go take a look at the chart. Let's pop on over the chart here. So you can see on CNBC, we're down about 4%, 5%. It's been a wild week. And if you look at the week here, right, guys, this is a day chart, right? So we go back to Monday here. Right, we got Friday, Thursday, Wednesday, Tuesday, and Monday. Monday just was ugly, right? That FUD, the FUD that everybody likes to use, that buzzword, right? Fear, uncertainty, and doubt was strong, as you Star Wars fans like to say. The FUD is strong today. And it's coming a little bit back. You can see we're having a little bit of red bar here. That was a nice little bounce there off that bottom. But this is what we're talking about with this chart we set up. And I wanted to go into this chart a little bit for you guys that are kind of learning and stuff, because there's some things we did as veterans, charting veterans, that you don't see anybody else doing on the internet. And it just comes from years of experience with stocks and stuff like that, especially something as volatile as Bitcoin, guys. So if you look at this chart, right, we started it when we had that huge sell down, right? We've set this chart up here, right? We put a Fibonacci on it. We put the most recent high. Then we waited for what we felt was a bottom, and then we put the bottom of the Fibonacci on that. Actually, we can adjust it a little bit because we had another test there, right? So we put that right there. And that's your Fibonacci, right? And you can use that. Everybody knows how to use a Fibonacci. If you don't, go Google it and go read about it. This is not a Fibonacci lesson. But what we did was, first thing, look, guys, you'll learn this in charting. You can complicate charting as much as you want. There's hundreds of settings. There's hundreds of indicators and stuff you can put on the chart. But really, it comes down to the basics of charting, okay? The first thing is the trend is your friend. You don't want to be swimming upstream on a long. You don't want to be swimming downstream on a short. Or vice versa, excuse me. You don't want to be swimming upstream on a short. You don't want to be swimming upstream on a long. But you do want to know what the trend is, right? And so the first thing we did was we sent a trend bar. And then we let this happen. And you saw we had this huge volume day and we had this big drop, right? And so that looked like capitulation. What is capitulation? Capitulation is generally the end of a strong trend, whether it's up or down. And what it is you most often see capitulation used in a downtrend, although it is true at a top too. A top is a form of capitulation too. But basically, this is what the easiest way to define capitulation. It's when everybody gives up. When everybody says, you know what, I don't want to own this no more. It's crap. I'm getting out. You saw it, right? We made jokes about it about a week ago. Remember, like that one guy on YouTube, right? He sits there with his coffee and stuff. He claims he's a millionaire and stuff, but every time we see a video from him, he's lost more money. You know what I mean? One day, right? One day, I'm selling my crypto. It's crap. And then the next day he's like, I shouldn't have sold my crypto. Why weren't we like that? Well, because we used our chart and we had it set up right. So we said that's capitulation, guys. When you see people all over, right, and on YouTube, all the experts and all the geniuses and stuff that, one day they're going to show you the 6 coins that are going to double in the next 5 days. And then the next day they're on there telling you that they sold all their Bitcoin because it's the end of the world. stay away from that kind of crap. Okay, guys, it's fun to watch, and we watch it too because it's fun and it's almost like entertainment, but don't bite into it. And so we've set that trend there, and the first thing we wanted to see is a break of the trend, right? We want to see it stop and capitulate, but at some point we want to see it change that trend, because if it kept going down, it would stay right along that bar and it'd be way down, way down, way down. Capitulation generally comes with massive volume. Okay, it's just everybody saying, I'm selling my coin, I'm getting the hell out, right? Except for the hodlers like us. And look at that volume bar. That's the biggest volume bar you've had in a year, right? You got to go all the way back to the beginning of, or about a half year, right? You got to go all the way back to that event that was at the end of the beginning of 2021. So let's open this up a little bit so we get a better view of it. And that's a huge volume bar. So we said to ourselves, well, that looks like capitulation. So originally we set our bottom there, right? This green line was there. We just moved it to this one. Now, during your capitulation and afterwards, you got to remember, this is huge, huge selling. I mean, this is literally, what was it, like $2 billion worth of crypto came off the board, something like that, some astronomical number. And it's all in that bar right there. So you look at that bar and you say, well, look, maybe everybody gave up. Now, here's another thing you'll notice on our chart that we don't do that other people do. We don't have a 50-day moving average on this. We only have the 200. Why? Well, over here you had this, right? Why? Because of the death cross. Everybody saw that 50-day coming below the 200-day. And so they were, oh my God, it's the end of Bitcoin. We're going down to 10,000. No, 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 no. These charts are so volatile on these coins that we do not use the short moving average. The way we track the short moving average is with the MACD, the moving average convergence divergence. That tells us right here, you see, if you open that up, you see how that blue line went below that red line. That's your short moving average versus your long moving average. You can see they just went in tandem. Your RSI showed you too that, yeah, it was a little weak, but that was the Death Star. If you sold on that death cross, guess what? You made a mistake. And it was because you had your chart set up wrong. Stay away from that short moving average. And you see that 200-day moving average has been more true to the price. You see how it stopped right around the 200, stopped right around the 200, stopped right around the 200, based around the 200, got a little testy, right? And then that was on their death cross. And all those people that sold down here are regretting it right now. Why? Because they bit into a false indicator. Okay, so look. Then first thing we wanted to do is see that trend broken. Now, a lot of times, like I said, when Bitcoin or any asset sells like this from 60,000 all the way down to 30,000, right? I mean, you're talking half the value is gone in basically 1, 2, 3, 4, 5, 6, 7, 8 days, a week. In 1 week, everything is half. So people freak out, and then your FUD, right? Your capitulation comes in. Now, what happens has to happen going forward is you want to see some normalcy come into your asset. And what I mean by that is just get your footing back. And that's what basing is. So we set up our baselines, right? We put them at the tops, the most recent tops, right over here. And we see it's playing true here. And then we put a bottom. We put one bottom on the price that it told us, and then we put a bottom based on bars. Oh, excuse me. A lot of coffee this morning. And what we wanted to see was this digest for a while. What's happening here is all these guys that sold, that those coins are changing hands, and you can see they're changing hands at a very stable price range. Right now, you might think to yourself, man, $5,000 or $10,000, right? Basically, right? 28,000 to 38,000, right? $10,000 range. Wow, that's kind of crazy, right? But remember, it's a very volatile asset. Look at CNBC, right? I mean, this is just one day and it's down $1,500. I mean, imagine that on an Apple chart or something like that, right? That'd be the equivalent of Apple being down $30, $40. So You want to see it gyrating here, and this is your buy area. What you're looking at it is your all these weak hands came out of the market, all these fear-based weak hands, right? They came out, and now what's happening is they're either reestablishing positions out of regret, right? Take the person that I was talking about on YouTube. Oh, I sold all my Bitcoin. Oh, I shouldn't have sold my Bitcoin, right? That's what's happening here. And also too, your hodlers like me didn't want to buy up here, right? We're riding it. And so we're adding to our positions. And so you see this stability here. And every now and then the bulls will get a little control. Then the bears will get a little control. The bulls will get a little control, and so on and so on. And every now and then you'll have a false indicator like you did with the death cross. The death cross was a big, big bear trap is what it was, because you see all these people sold here and you could have just waited. That created this. So, and that's another thing too on your charting. Know what events are happening and rationalize them. So we're just holding on, guys. If this lasts for a couple more weeks, that'll be great. We'd love to be able to add some more Bitcoin in that $30,000 to $40,000 range over the next coming weeks, right? And that's all we're doing, and letting it get bearish, letting it get bullish again. So there you go, guys. That's your definitive chart right now. You want to know one chart to watch? It's our chart. So we're going to NFT that at some point. But anyways, guys, look, there's just not a lot of crypto news right now. The Chinese news is passe already. They're doing what they're doing, and they did what they did. And I kind of explained it a little bit previously, right, with the Chinese, that they're not getting out of crypto. What they're doing is they're getting into crypto that they can control and they can manipulate. It's like anything else with the Chinese government. If they can't control it, if they can't manipulate it to their favor, they're going to destroy it, right? That's the way they win. So yes, they're pushing the miners out, but those miners will find another place to live. The miners are becoming more green every day, more green every day. Look at a country, guys, a country like the United States. You can't go green overnight, right? Because all those lights that are kept on by fossil fuel electricity, guess what? You need another method to keep those lights on, right? To keep all this power going. And it just doesn't happen overnight. It's the same thing with the miners. Again, maybe they move out of China, but then they start finding another place to operate. Business is like water. It will find its level. But also too, everything is moving towards green. Look at Elon Musk. How can you one day, right, say, I'm selling my Bitcoin, I'm not taking Bitcoin at my company because it's killing the environment, and then not even 10 days later come out and say, oh, it's better now? What changed in 10 days? In 10 days. And so it's just a big myth, guys. Don't bite into the myth. That plays on your FUD. Kramer, right, who is out there, he claims that he sold his Bitcoin and he's staying out of crypto. I think it was till 18,000. Good luck finding that level, my friend. But another one, don't ever believe a freaking word that anybody in the media or any millionaire tells you, okay? Don't believe any of that crap. We know it, Kramer, right? For months and months and months, he said cryptos were not the right thing for your portfolio. Then all of a sudden he comes out and says, I paid my mortgage with my Ethereum. It's like, when the fuck did you buy the Ethereum? Don't believe anything they say. This is like Goldman. Goldman comes out and says one day, right, that crypto is it's not for anybody. Stay out of crypto. And then they come out with news saying that they're creating a crypto trading environment, right? Come on, which is it? Anyways, stick with your beliefs. If you believe in the blockchain, if you believe in cryptos, then invest in it, but invest smart, like we showed you with the chart. Now is your buying range. Now is your buy and hold. Stake your coins. Get on an interest bearing wallet like a Nexo or something, and just buy and hold and let it build, let it build, let it build. It's just like back in the day. People keep asking me because most people haven't seen a real bear market in the stock markets, right? And they keep asking me what it's like, and I said that's what it's like. It's like where you're in crypto right now. It's a stagnation of everything. The things that do the best over time are those that get dividends and have strong balance sheets. You'll have these little anomalies every now and then, but in a sideways market, that's what you want to do. Why? Because it's generically creating more position. You know what I mean? You don't want to have 10 coins at the beginning of the sell down, and then after the sell down gyrates and it moves back up, you still got 10 coins. Then you haven't done anything. But if you keep your coins staked and you keep them on, or keep them on an interest bearing wallet or something like that, guess what? Those 10 coins, by the time the thing goes back to 60,000, maybe it's 20 coins. Now you've doubled your money and you've doubled your asset value. Oh my God. So be patient in your trading, okay, guys? And be careful with news, okay? And be careful with the source, all right, guys? Either way. But look, cats, you guys have a great weekend, okay? As always, it's been a fun week. Thank you for tuning into the Crypto Show. I can't thank you enough for watching. If you're one of our 3 viewers. But if you look at it, since we've started this crypto adventure, right? I think this is our 5th or 6th show. We've been the only ones that have been right? All right, guys. I'll see you guys next week.